Good morning. Welcome to ET. Now you're watching Market Cafe with me, Kanishka Sarkar and Ankur Mishra, a show where we'll take you through all the global cues and tell you about all the stocks that you should be keeping on your radar today. So let's get started with an eye on the globe first. Now, Ankur, it was a largely positive session on the Wall Street. S&P 500 and Nasdaq both hit fresh record highs.
Definitely a record high for S&P 500 as well as Nasdaq, and US futures are also steady after record highs. In fact, tech giants Alphabet, Amazon were leading the rally. However, if you talk about Dow Jones, that underperformed and closing slightly lower. But as far as the other markets are concerned, Asian markets are concerned, which we'll tell you in detail later in the show, they have also taken a positive views from US markets.
That's right, but let's also shift focus and put the spotlight on commodities then. Now, oil prices, they were largely unchanged yesterday, with Brent crude settling at that $69 per barrel mark, down about 7 cents, whereas the WTI, that closed at $67, off by about 14 cents. Now, this dip came as markets shrugged off new EU sanctions on Russian oil, expecting little real disruption. Now, the EU's latest package even targets India's Nayara Energy, but analysts say that enforcement challenges continue to remain. Meanwhile, US tariffs and weak drilling activity are also raising fresh concerns for the commodity. Now, with tariffs on EU imports set for August 1st, traders fear a hit to global demand. In fact, analysts expect oil to stay range-bound between that $64 and $70 per barrel level, barring any sharp supply shocks that may arise. Other than that, let's also take a look at how gold did overnight. Now, gold prices, they surged over 1%, hitting a 5-week high of $3,394 an ounce, as a weaker US dollar and bond yields, they boosted demand. The gains, these come ahead of the August 1st US trade deal deadline, as we said. That is stoking uncertainty and also lifting safe haven demand. Now, traders are also pricing in a 59% chance of a Fed rate cut in September, while speculation around a leadership shakeup at the Fed, that is also adding to market nerves. So that's how the commodity market is shaping up.
Yes, definitely. That's the update on commodity markets. But how did Indian equities market perform yesterday? Nifty snapped its 2-day losing streak to close above 25,000 mark, buoyed by gains in ICICI Bank and Eternal. Broader markets were mixed, while Midcap rebounds smartly. Small cap underperformed, slipping for the third straight session. Let's go across to my colleague Snehi for full roundup of yesterday's session.
It's been a good start to the week with the kind of trading session we've had yesterday. Almost a 0.5% uptick is what we've seen on the Nifty and on the Sensex as well, slightly more than 0.5%. The good news is that Nifty has ended above that 25,000 mark and very close to 25,100. So those are going to be some key levels to watch out for in today's trading session if we can breach that 25,100 mark. Nifty Bank has also done exceedingly well for itself yesterday on the back of good action from ICICI Bank and HDFC Bank, a 1.2% uptick coming in on the Nifty Bank index. It's names like Eternal, ICICI, HDFC Life, M&M, BEL, Shriram Finance, Bajaj Finserv that were gaining with more than 1% each yesterday, and that helped the Nifty stay afloat. On the flip side, some pressure built on a big boy Reliance, a 3% cut over there, followed by Wipro, IndusInd Bank, Aisha and HCL Tech. Those were some stocks that were keeping Nifty in a range-bound session. Other than that, if you take a look at the action from the broader end, the mid-cap index outperformed the benchmarks, while the small-cap index ended in the red with a very mild hint of a negative bias. In terms of some sectoral moves, Nifty Bank, Metal, Auto, Realty, Media and Energy closed in the green. On the flip side, some pressure from PSU banks, FMCG, IT and Nifty Pharma kept the broader end in check. Now, in terms of the key levels to watch out for today, when we interacted with our technical experts, Ruchir Jain believes 24,900 should stay intact, and Aditya Agarwal believes that we can open slightly flat to positive today and market can stretch to 25,200 as well. So all eyes are going to be on these levels, and well, yes, so we'll just wait and watch what happens in today's trade.
All right, so that's how the Indian market setup is looking. That's how we closed above that 25,000 mark yesterday. But moving on, let's also put the spotlight on how the F&O market is shaping up today. Sharath, how is it looking?
At yesterday's trade, both Nifty and Nifty Bank saw a strong recovery after, you could say, a gap down opening. and importantly they have sustained over important support levels. Now the India VIX, that's been largely unchanged and not so much change happening. PCR numbers still comfortable for both Nifty and Nifty Bank as well, but for Nifty the activity is now moving towards the short covering position. There's a slight change in the open interest in the lower side, and the most active strike price for Nifty weekly expiry, this call option includes 25,100. Call buying is happening, and at 25,000 put writing is also there. Highest open interest strike price for the Nifty weekly expiry. For put it's 25,000, and for call of course two numbers are coming, 26,000 as well as 25,000. Nifty Bank activity also short covering happening. The change in open interest that has actually seen a bigger number, -4.5%, and the highest open interest strike price for put it's 56,000, and for call it is 57,000. Also the FI long positioning after the previous trade, that has actually slightly gone up, not to be a big matter of cheer, but still it's on the upper side, actually falling after 8 to 9 odd sessions. There seems to be bottoming out. DI long positioning, that has also gone up from 68 to 69 odd percent, and the retail, that's flattish, coming in at 65 odd percent. FNO Bank to FNO ban, there are actually two banks in the space, RBL Bank and Bandhan Bank.
All right, moving on, we have ready Ravinder with stocks in news. Ravinder, over to you. Which are the stocks we should watch out?
Well, yes, PNB Housing can be in focus, where company has reported their Q1 number, and company reported PAT at 532 crore as compared to earlier PAT of 439 crore, which was up by more than 21% year-on-year basis, and company's asset quality also improved. Apart from this, Oberoi Realty can be in focus on back of their weak Q1 FY26 earning, where company's revenue was declined by approx 30% on a year-on-year basis at rupees 988 crore, and net profit also saw a decline of 28% on a yearly basis. If we talk about EBITDA and EBITDA margin, then EBITDA saw a decline of 36% year-on-year basis at 521 crore, and margins also saw a downtick of more than 500 basis point year-on-year basis. So overall a weak set of number for Oberoi Realty. Apart from this, Titan can be in focus into today's trading session, where Titan, through its wholly owned subsidiary, Titan Holding International FZCO, has entered into a definitive agreement to acquire 67% stake in Damas LLC, the holding company of Damas jewelry business in the Gulf Cooperation Council region, from Manai Corporation, and the transaction packed at an enterprise value of AED 1,038 million, which is equivalent to $238 million. And lastly, CI Automotive is also in focus on the back of their earning, where company reported revenue at 2,369 crore with an uptick of more than 3% year-on-year basis, and a net profit saw a decline of approx 6% year-on-year basis. If we talk about EBITDA, then EBITDA also saw a downtick of 7% at rupees 336 crore, and margins saw a downtick of 150 basis point year-on-year basis. So overall, a mixed set of number of CI Automotive.
All right, so Titan on the back of that acquisition and several other counters on the back of their earnings is what we'll be tracking. But coming to you now, Sharar, which are the stocks on your list today?
In a relief to the capital market stocks, SEBI has stated in its circular that Jane Street is no longer barred from placing orders or trading in the Indian securities markets. Now, the exchanges, clearing corporations, depositories and banks no longer require to restrict Jane Street. However, Jane Street must not engage in any manipulative or fraudulent trading patterns, as still the investigation is underway and final proceedings will be stated. But this of course comes as a relief for the capital market stocks, and stocks such as BSE, CDSL and even broking house stocks have already buzzed in yesterday's trading session, and today also they might be jumping as well. Havells, the next stock, subdued summer coming in, impacting the Q1 numbers, and overall the cable and wire segment was the only silver lining, with almost 20 to 21% year-on-year basis volume growth, and in their segment itself there was a margin expansion as well. But net the numbers have been weak overall. MRPL, the con call has been good, but of course the numbers were bad, and that's why we saw a knee-jerk reaction in the stock yesterday. The management expects the GRM to be in high single digits in the second quarter, supported by stronger middle distillate cracks, which roughly contributes 50% of the total product slate portfolio.
Thanks, Sharad, for those details. But in yesterday's trade, there were few stocks which were up despite bad earnings. Yes, I'm talking about Eternal, and that is in the list of Varun. Varun, over to you.
Definitely. So Eternal is the first stock and you need to keep an eye on because the overall results have been a miss. If you look at revenue, they have been a beat, but the EBITDA and profit and margin has been a miss for the company. Although the overall quick commerce that has given a positive surprise, wherein the net order value that has soared by around 127% on a YOY basis, which is very good and it is ahead of expectation. Also, the company says that the Blinkit and Hyperpure losses they have narrowed. The company also says that going forward, the margin should improve because of the overall operating leverage. But yes, they have actually lowered the overall food delivery guidance. So yes, the overall results are a little bit missed. The guidance has been cut for food delivery, but the quick commerce that has given a positive surprise. Now, Ultratech, the company reported its overall results during yesterday's market hours, but in the con call, the overall guidance given by the management is quite good. The management has guided for a double-digit volume growth in FY26, and also the management says that the cement prices are holding steady versus the Q1 FY26 exit price. Management has also said that India Cement is expected to achieve EBITDA per ton of around 1,000 plus in FY28. Also keep an eye on Bajaj Finance because the recently appointed MD, Mr. Anup Saha, has actually resigned for the company. He was appointed in the month of April 2025, and now Rajiv Jain will now be the Vice Chairman and MD of the company till March 2028. So this could be sentimental negative for Bajaj Finance.
All right, so Eternal, Ultratech Cement and Bajaj Finance on your list, Varun. Thank you so much. In fact, thanks Sharad, Rabinder and Varun for taking us through the entire list of stock that we should be keeping on our radar today. But moving on, let's go to Snehi, who's standing by with the list of all the local and global cues that we should be watching out for in today's trade.
Well, yes, not much to watch out for when it comes to macroeconomic action back home. But other than that, when you take a look at some important cues to track, globally from the US, we'll have the Richmond Fed Manufacturing Index numbers come out. And along with that, in terms of global earnings, Philip Morris and General Motors, two of these big heavyweights are going to be in focus in the trading session. Shifting focus back home, while no Nifty earnings are expected from the broader end, you have names like M&M Finance, Cyan DLM, Paytm, JSW Infra, Mahanagar Gas, Dixon Tech, Dalmia Bharat, Colgate, and a whole host of other stocks that will be coming out with their numbers, and they will continue to be in focus. In terms of AGMs, you will have Titan, IDBI Bank, Colgate and M&M Financial that will be holding their annual general meetings. So those presentations or any new announcements will be important to watch out for. And lastly, in terms of corporate action and board meetings, watch out for Strides Pharma. That stock will be trading ex-dividend, and it's going to be the last day to buy shares of Heritage Foods, Greaves Cotton, Mahindra Logistics, Pidilite, Root Mobile and Sonata Software to be eligible for their dividend record date if you wish to do so. So watch out for all of these cues very closely.
All right, thank you so much, Snehi, for that update. But with that, let's also keep an eye on Asian markets and particularly Japanese market. There is not much action after Japanese Prime Minister Ishiba has decided to stay on despite not having majority, and that has happened second time in a year. And you can see that 97 points up Nikkei as far as Japanese market are concerned. It is important because he wants to stay on to negotiate deal with the US. And shifting focus to US, shifting focus to Chinese market, we can see Hang Seng is Hong Kong market is up around 0.3%, though flat to positive start for both Shanghai as well as Hang Seng. And you can see that both the markets trading in positive territory, and so is the case with Australian markets. ASX 200 is again flat to positive, but also shift focus to KOSPI, which is actually slightly down in the opening, but all in all flat to positive cues coming in from Asia. Nifty implied open is also indicating a positive start after a good session yesterday.
That's right. So 55 points uptick is what we are expecting for the Indian market as of now. But to take the conversation forward about how the Indian markets are expected to fare, we will be joined by Ashish Gupta, the CIO at Axis Mutual Fund, and Harsha Upadhyay, the CIO Equity at Kotak AMC. Later on, the market, which is coming up next to talk about all that's been happening in the market and what to expect of the earnings season. Apart from that, on the market, we'll also be joined by Ashwini Kumar, who's the MD and CEO of UCO Bank, to talk about how the company's earnings have been. And we'll also have a post-earnings interaction with Anil Rai Gupta, who's the chairman and MD at Havells India, who will take us through the fine print of Havells India's results and the way forward for the company. On that note, we'll take a very short break. We'll be right back with more on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
As Vijay Utsav, meaning victory celebrations for the nation. However, opposition demanded discussion on Operation Sindoor and Lok Sabha was adjourned due to the chaos in House. Leader of opposition Rahul Gandhi claimed that he was not being allowed to speak. Union Minister Dharmendra Pradhan hit back, saying that the parliament is not Rahul's drawing room. So, is it time for government to take hard questions by the opposition on Operation Sindoor? And should India ramp up defense spending? We discuss this and let's listen to the political reactions on the same.
साथियों, ये मॉनसून सत्र राष्ट्र के लिए ये बहुत ही गौरवपूर्ण सत्र है। ये मॉनसून सत्र राष्ट्र के लिए एक अपने आप में विजयोत्सव का रूप है।
देखिए, सवाल ये है कि जो हाउस में डिफेंस मिनिस्टर को बोलने देते हैं, उनके लोगों को बोलने देते हैं, मगर अगर विपक्ष का कोई कुछ कहना चाहता है तो अलाउड नहीं है। मैं लीडर ऑफ ऑपोजिशन हूँ, मेरा हक है, तो मुझे तो कभी बोलने ही नहीं देते हैं।
Well, indeed, a stormy start to the monsoon session, but let's shift focus to some macroeconomic data as well. Now, India's index of 8 core industries increased 1.7% on a year-on-year basis in the month of June. Now, out of the 8, electricity, crude oil, natural gas, coal and fertilizers, they recorded negative growth. Meanwhile, steel, cement and refinery products, they saw positive growth. The cement sector was the best performing one in June, whereas the coal sector was the weakest. Now remember that in May, the index rose 1.2% annually, and this is also the third consecutive month that the index growth is below 2%. Ankur?
And shifting focus to Chennai, the land acquisition for Chennai's second airport at Parantur is on track, but mounting local protest, political opposition and environmental concerns continue to cloud the mega greenfield project's future. ET Now's Jude filed this report earlier.
Sources have told ET Now that the Tamil Nadu government is on track to complete land acquisition for Chennai's new greenfield airport in Parandur, 70 kilometers outside the city, by the end of this year. In all, the Tamil Nadu government, we're told, is targeting a total land acquisition of 3,774 acres of privately held land, along with 1,972 acres of government-owned land, so as to kickstart construction for the project, which we're told will now begin well ahead of the Tamil Nadu Assembly elections in 2026, which is, of course, next year. What this essentially means is that the Tamil Nadu government is targeting the functioning and the inauguration of phase 1 of a fully functioning greenfield airport by the year 2028. Now, all of this essentially means a windfall for landowners here in this tiny hamlet just outside Chennai. We're told that valuations range from anywhere between 35 lakh to 2.5 crore rupees per acre that the Tamil Nadu government is offering landowners here as compensation for acquiring their lands for the purpose of construction of this project itself. In all, nearly 17.52 acres owned by 19 landowners have been sold to the Tamil Nadu government, which has coughed up nearly 9.2 crore rupees by way of compensation as of the 9th of July. Now, while the project itself is much hyped, it isn't without its own share of controversy. Social activists, environmental activists, several locals and also opposition parties in Tamil Nadu have called for the scrapping of the project, largely on account of the fact that it is proposed to be built over alleged eco-sensitive water bodies in the state itself. While the principal opposition, the AIADMK, has called for the will of the people to be adhered to in the proposal of the construction of the airport itself, up-and-coming actor turned politician Joseph Vijay has called for the complete scrappage of the project itself. But for the moment, what we're told is that the Tamil Nadu government is on track and is confident of completing land acquisition by the end of this year, before saying it will have phase 1 of a fully functioning airport by the year 2028.
Thanks, Jude, for all those details. But in a development which is important for Indian securities market, the restrictions which were imposed on Jane Street, and there were several restrictions which were imposed after the interim order which came on Jane Street. Some of the restrictions have been lifted. Which are those? Directions 62.2 to 62.1. No, I'm not going to talk about these numbers. What we have learned is that Jane Street can actually trade in Indian markets, and they are no longer barred from placing orders or trading in Indian securities market. Why it has happened? Because Jane Street has complied with the interim order by depositing the said amount of around 4,800 crore, and this was the amount which SEBI in the interim order had alleged that Jane Street might have done manipulative trading, and the X amount was asked to be deposited in the escrow account, and that has been done by Jane Street. So essentially they have complied with the order, and now Jane Street is allowed to trade in Indian market, and that restriction is lifted for now. But does that mean a clean sheet for Jane Street? No, it is not a clean sheet for Jane Street. SEBI's investigation will continue. As far as interim order is concerned, SEBI will prepare a final order after looking at all the aspects. In fact, we were told there will be widening of the probe. There might be more dates where manipulative trading might be checked, which is allegedly done by Jane Street. So it is not a clean sheet for Jane Street, but for now certain restrictions have been lifted.
That's right. So some relief coming for Jane Street. The market regulator has lifted some restrictions, but there certain restrictions continue to remain. But moving on, let's also talk about SP. Now, the lenders board has announced closure of its QIP. The board has approved allocation of approximately 306 million shares at a price of 870 rupees per share. Anurag Joshi is joining us with all the details.
State Bank of India, India's biggest lender in terms of assets, has closed its qualified institutional placement of equity shares. Last week, ET Now had broken the story that the SBI QIP is going to close on Monday. Now, through the QIP, SBI has raised 25,000 crore rupees, and the board of the bank approved the closure of the QIP. The bank will allot 306 million equity shares at 817 rupees a share to the shareholders, thereby raising 25,000 crores. Now, interestingly, in the QIP, Life Insurance Corporation was one of the backers, and it had anchored about 7,000 crore rupees of the issue.
And now getting updates on US-India trade talks. We have been told through sources that US team will visit India in the second half of August for the next round of negotiations for the proposed bilateral trade agreement between the two countries. Negotiations related to an interim deal continue ahead of August 1 deadline. My colleague Sumita, who has been keeping a close eye on US-India trade deal, is here with more details.
That's right. We're given to understand from sources that a team from the United States will be visiting India in the second half of August for the next round of negotiations for the proposed bilateral trade agreement between the two countries. Meanwhile, we're also learning that negotiations that are related to an interim deal, they continue ahead of the August 1 deadline. Remember, India and the United States concluded the fifth round of negotiations in the United States for this agreement, this interim trade deal in Washington, and issues related to agriculture and automobiles are learned to have figured during these fifth round of negotiations. In fact, these deliberations are important as both sides are looking at finalizing an interim trade deal before August 1, which actually marks the end of the suspension period of Trump's tariffs imposed on dozens of countries, and that includes India as well. Now, India has hardened its position on the United States' demand for duty concessions on agri and dairy products, and India so far has not given any duty concession to any of its trading partners in a free trade agreement in the dairy sector. India is also seeking a removal of this additional tariff of 26%. It is also seeking the easing of tariffs on steel and aluminum and the auto sector. Now, the country is also seeking concessions for labor-intensive sectors in the trade pact. On the other hand, the United States actually wants concessions on certain industrial goods. That includes automobiles, electric vehicles, wine, petrochemicals, agri and dairy items, and GM crops as well. Now, it remains to be seen whether there is a deal before August 1 or not, given the fact that Donald Trump has stated at least on two occasions in the recent past weeks that a deal with India is happening soon.
All right, it's key to watch whether or not we're able to get that India-US trade deal before August 1st. Thank you so much, Sumita, for joining us with all the latest details. But moving on, now the government is taking a multi-pronged approach to sustain economic growth amid global uncertainties. That's the word coming from Minister of State for Finance, Pankaj Chaudhary. He said that in a written reply in the Lok Sabha. He has also said that the fiscal deficit target for the current fiscal remains unchanged at 4.4%. Prakash is now joining us with all the details.
Yes, India's economic resilience is supported by strong macroeconomic fundamentals amid the current geopolitical uncertainties. The statement was made by the MOS Finance Minister Pankaj Chaudhary in a reply to a question in the Lok Sabha. He clearly stated that the government is taking a multi-pronged approach to address recent global challenges. In fact, engaging with countries for the finalization of various bilateral trade agreements, steps have been taken to liberalize the FDI policy to attract foreign investments. In a reply to a separate question, the junior finance minister has also informed that there is no such plan to revise the fiscal deficit target at this stage for FY26, which is set at 4.4%. In fact, the government is moving ahead with a set target, and there is no such plan which is under consideration. Along with that, the MOS Finance has also informed the House that the GST GOM, in fact, GST Council has constituted a GOM on rate rationalization, which is yet to submit its report. On the issue of disinvestment in PSPs, the junior finance minister has informed the Lok Sabha that the disinvestment in PFCs through minority stake sale is carried out using various SEBI approved methods, and it will be undertaken based on prevailing market conditions.
Prakash, stay on with us because you have been keeping an eye on the monsoon session per se, and the Lok Sabha committee has made several recommendations to the income tax bill. The report is made with the intent to remove ambiguities within existing laws. Prakash, tell us more about this report.
The Select Committee of the Lok Sabha has submitted its report on Income Tax Bill 2025. The committee has made several recommendations. In fact, the bill was first introduced by the Finance Minister in February this year. Now, the committee has submitted its report to the Lok Sabha, where it aims to amend provisions to remove ambiguities in the existing laws. Along with that, a recommendation has also been made for removal of compulsory filing of returns for individuals with income below the taxable limit. Along with that, the committee has also recommended providing relief to homeowners on deductions related to property income. where it has also mentioned that the homeowner should be allowed to carry forward losses even if there are temporary changes in shareholding pattern. Along with that, the issue related to a phrase in the circumstances of the cases should be reintroduced, what the committee has suggested to ensure more transparency for the taxpayers. Along with that, the committee has also suggested to the Finance Ministry that the definition of micro and small enterprises should be aligned with the MSME Act to provide handholding to the small businesses.
All right, thank you, Prakash, for getting us the latest on the income tax bill. But on to an ET Now exclusive now. Allianz is set to merge its existing Reassurance India business into a JV with Jio Financial to comply with the IRDAI norms. Now, ET Now learns that the existing AGCS India operations will shift to the domestic reassurance venture. Anurag Shah is here with more details.
Global insurance player Allianz would be merging their Indian reinsurance business into the planned joint venture. Allianz Global Corporate Specialty Division, which does reinsurance business in India through their foreign reinsurance branch, will be merging their reinsurance business of India into the planned joint venture, which is announced by Allianz and Jio Financial Services. 50-50 joint venture announced by both the companies. One of the reasons for merging the Indian reinsurance business into the planned joint venture is that IRDA rules does not allow a promoter to hold stake in more than one company of each segment, which means a promoter cannot hold a stake more than 25% in two companies, which is of each segment, that is life insurance, general insurance, health insurance and reinsurance. So that is also one of a reason that going ahead, Allianz, the Indian reinsurance business will be merged into the new joint venture. So on a query sent by ET Now, Allianz has replied to ET Now that Allianz operate FRB in India since 2018 via AGCH branch. Reinsurance lines include property, marine, cyber, energy. Existing Allianz Global Corporate Specialty business to shift to new reinsurance JV and business transfer is subject to regulatory approval by IRDA. So last week only, Allianz and Jio Financial Services announced their 50-50 joint venture for new reinsurance company, but IRDA rules were also hurdle for getting the approval. So going ahead, that assurance Allianz will give to merge their existing business into the joint venture company.
Thanks, Anurag Shah, for all those details. So, Allianz is actually clearing all the decks for approval of the proposed GV. But moving on to some national news, Vice President Jagdeep Dhankar has resigned with immediate effect, citing health and medical grounds in an unprecedented and unexpected move that came after he presided over the first day of monsoon session. Apart from that, the British F-35B fighter jet grounded at an Indian airport for over 5 weeks has successfully completed its trial flight and is set to depart today. Yesterday, the UK team took the aircraft out of the hangar of International Airport after completing over 2 weeks of maintenance on the stealth aircraft.
India will face England in the first test at Old Trafford, Manchester tomorrow. India trail the 5-match series by 2-1 and will look to level it in this crucial encounter. Jasprit Bumrah will play the first test, while all-rounder Nitish Kumar Reddy, who played the second and third test and impressed at Lord's as the fourth seamer, now ruled out of the series with injury. A day after U.S. Commerce Secretary Lusnick's comments, U.S. Treasury Secretary Scott Bessent is also chiming in now. He has signaled that Trump's August 1st tariff deadline is less of a cutoff and more of a negotiation tactic. During an interview, Bessent said that steep tariffs, some up to 40%, could pressure key trade partners into offering better deals. While investors remain uncertain, top officials insist that the deadline is hard, even as past ones have slipped.
putting pressure on its major ally European Union, which will be subjected to a 30% baseline tariff from next week unless they reach a deal. Trump is reportedly pushing for 15 to 20% minimum duties, with auto tariffs possibly staying at 25%, which will be a big blow to Germany's car makers. The EU facing what one economist calls a potential car crash for exports is scrambling for last-minute deal. With tensions rising and few signs of compromise, Brazil may soon retaliate as the bloc's trade surplus with US becomes a pressure point. Meanwhile, Donald Trump is leaning fully into crypto. Trump Media and Technology Group has amassed a $2 billion Bitcoin stockpile, now making up 2/3 of its liquid assets. The announcement sent DJT shares soaring. Trump's personal stake in the company is now valued at $2.3 billion. Remember, the president has also signed the Genius Act into law and launched initiatives to position US as global hub for digital currency.
On the other hand, Jeep maker Stellantis is bracing for a $2.7 billion loss, citing the early sting of US tariffs. Now, the automaker pulled its full-year guidance as second quarter shipments fell 6% globally and 25% in North America, with declining imports and fleet sales. CFO said that additional cost pressures and currency shifts worsened the hit. A major cyber espionage campaign exploiting a zero-day flaw in Microsoft SharePoint has hit around 100 organizations, including government bodies in the US and Germany. Researchers have said that the vulnerability affects self-hosted SharePoint servers, exposing thousands more to risk. Microsoft issued a security update urging immediate patching. Security experts warn that the real number of victims may rise as hackers likely planted backdoors for prolonged access.
And tragedy struck Dhaka as Bangladesh Air Force F-7 BGI jet crashed into school and college campus, killing at least 19 and injuring over 160. The pilot, who also died, reportedly tried to divert the jet after a mechanical failure moments after takeoff. The Chinese-made jet, part of 2011 deal, is the most advanced variant of J7 family. Videos showed flames and thick smoke as emergency crews battled the blaze. A military injury is underway into one of the deadliest peacetime aviation accidents in Bangladesh, and that will be inquired. And IMF's second highest ranking official, Geeta Gopinath, is set to step down at the end of August to return to Harvard University as a professor, the fund announced. Gopinath, who made history as IMF's first female economist in 2019 and became first deputy managing director in 2022, said the decision marks a return to her academic roots. Her departure gives the US Treasury an opportunity to recommend a successor.
Alright, so those are all the national and global stories that we are tracking this morning. But on that note, we'll take a very short break. More discussions related to earnings coming up on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter. It's not about left or right. It's about what's right for India. It's about holding the powerful accountable.
India Upfront with Pranesh.
This far because overall B2C business NOV, which is the net order value, is up 55% on a year-on-year basis. Food delivery average monthly transacting users have seen a big spike of 2 million users just on a sequential basis. So very sharp uptick over there as well. Quick commerce, Blinkit has shown this time across all the other segments. Quick commerce revenue has beat estimates, GMV has beat our estimates, quick commerce EBITDA and adjusted EBITDA losses have reduced. Now mind you, this is something the street was not expecting at all. We were expecting very flat moves over here, but the loss reducing is a big positive coming in from Blinkit, and the quick commerce average monthly transacting users have also seen a very sharp uptick. Other than that, Hyperpure revenues have also beat our expectations, and most upbeat is management commentary on food delivery, wherein on one hand, yes, they have cut their guidance from 20% to 15% in the near-term margins, but they also say that they expect the margin expansion to go ahead, and for Blinkit as well, the numbers are expected to get better from here in terms of margins, because the store that they have opened 12 months ago will start maturing. They've also added around 243 net stores in Q1, taking the total store count to 1544. Now, while all of this looks good, let's understand what brokerages are making of this. You have target hikes coming in. While the stances have been maintained, target hikes coming in from Morgan Stanley, Goldman Sachs, CLSA, JP Morgan, Nuvama, as well as Elara. The highest target coming in from CLSA, wherein they've hiked the target price to 385 from 375. So watch out for Eternal in today's trade.
That's right. Thanks, Nehi, for taking us through the fine print of Eternal's numbers and also what different segments have done and what brokerages are making of it. But now let's also take it to Eternal's management and see what they have to say about the company's results and the outlook going forward.
So, yeah, Sajin, I think quick commerce has definitely been a headwind to some extent for the food delivery business, because I think some of that consumption has also moved to quick commerce, right? But having said that, I think we still believe from a penetration standpoint and opportunity standpoint, we still do think that long term the business can grow at 20%, although that visibility is not there for the near term at this point. But I think there's enough going for us to be excited about the business. And I think if we do well and we are able to innovate and unlock more use cases for food delivery on the app, then I think we get back those 20% growth levels again, if you look at it on year-on-year basis, right? So I think quarter-on-quarter, yes, it can appear to be lumpy, but if you look at it more longer term, I don't think there is any divergent trend there, and we expect that MTC growth to continue along with NOV growth, AOV growth, which should continue driving the growth of the overall business going forward like it has in the past. And I think your assessment is right. That's what we expect. I think in that time frame, we should be able to move most of our business to inventory ownership, and the margin accretion should also happen in that time frame. The growth momentum remains strong, and at least for the next 2 years, we feel that the growth rates will be high as we still are building out more infrastructure, and getting to 3,000 stores will take time.
All right, that was Eternal management detailing Q1 numbers, but Ultratech has posted 49% increase in its net profit to 2,226 crore. But how is the management guiding? Let's look at Ultratech comments con call highlights. The management has guided for a double-digit volume growth in FY26. What are the brokerages suggesting? Srishti is here with more details. Srishti, over to you.
Well, yes, when it comes to the number front, we have seen a bit of a miss coming in on the margin figure, but the management commentary remains very optimistic, and especially on the growth outlook ahead, where the management has guided for a double-digit volume growth in FY26, which will actually include, because FY25 numbers actually included the Kesoram numbers for the whole year, and India Cement numbers were also there for the 1 quarter, and over and above that, the management is optimistic for a double-digit growth volume, which is indeed very much positive. Also, along with that, when it comes to the prices, so management is saying that the cement prices are holding steady versus the Q1 FY26 exit prices, and as of now, the eastern regions has seen the price hikes in July as well. But when it comes to the brokerages, they are sounding positive too, because a lot of these brokerages have gone ahead and raised the target price as well, though they are actually going ahead and forwarding their valuation multiple to the next year. But firstly, let's talk about Antique, because they have actually maintained their buy rating on this particular counter, raised the target price to 13,750 rupees. It's been an inline quarter for the company, and the focus is on improving the profitability of the acquired assets. They are also raising their EBITDA estimate for FY26 by 3%, and they're expect the volume CAGR of 10% between FY25 as well as 28. Now, when it comes to Nuvama, they may continue to maintain their hold, but the new target and revised target price stands at 13,628 rupees. Same is the case with the Lara, maintaining their accumulate rating on this one, raising the target price to 14,088 rupees. The benign cost and the higher prices will bolster the margins in the times ahead, and same is the case with Motilal Oswal as well, because they too have raised their target price to 14,600 rupees versus 14,200 rupees earlier, where they are saying that the management reaffirmed their long-term growth backed by efficiency, expansion and a strong balance sheet is what they actually like about Ultratech Cement, and hence a lot of these brokerages that have already gone ahead and raised their target price on this counter.
Right, so several target price upgrades coming for Ultratech Cement. Thank you, Srishti, for taking us through them. But let's bring back Snehi to tell us how Titan is going global in a big way. Now, the company has acquired a 67% stake in UAE-based Damas Jewelry for an enterprise value of over 2,400 crore rupees. Now, with this, Titan sharpens its focus on international jewelry market. Snehi, over to you. Take us through the finer details.
Well, yes, so Titan will be in focus in today's trade on the back of the acquisition that they have recently announced, and they're going to be acquiring 67% stake in Damas Jewelry. Now, this is going to be happening via Titan's wholly owned subsidiary, Titan Holdings International, and they will be acquiring the 67% stake in Damas LLC, which is a UAE-based company from their owners, Manai Corporation. Now, the deal is expected to happen at an enterprise value of roughly 1,038 million AED. That roughly translates to 2,438 rupee crores in Indian terms. Now, what's important to note is that the Graph monobrand franchise of this business will be discontinued or will be carved out before this entire franchise is transferred to Titan, because they will now be holding the majority share. So that's one thing to watch out for. Other than that, based on the agreement post December of 2029, Titan can go ahead and buy the remaining 33% stake and complete their full ownership, and Manai will retain a minority stake for the next 4 years at least, using the sale proceeds to strengthen their trade and IT services while also reducing their debt. The transaction is expected to close by January 31st of 2026, subject to regulatory approvals. A little bit about the company. Damas was founded in 1907, owns 146 stores in the GCC area, and FY24 revenue came in at AED 1,461 million. The rationale behind this deal is that this deal expands Titan's jewelry business across 6 major GCC countries, the likes of UAE, Saudi Arabia, Oman, Qatar, Kuwait, as well as Bahrain. The funding of this deal will be financed through a mix of debt, cash balances and internal accruals. And what the management had to say, that's MD CK Venkatraman, he says that this acquisition will take Titan beyond the Indian diaspora to focus on other nationalities, expanding its global jewelry ambition. So on the back of this acquisition, Titan is going to be in focus today.
All right, Snehi, thank you so much for those details. While Shanghai as well as Hang Seng has slipped into red, but Gift Nifty is still indicating a positive start. But what to do next? You have the market coming up next, and with this, it's time to say goodbye in this edition of Market Cafe. Thanks for watching.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter. It's not about left or right. It's about what's right for India. It's about holding the powerful accountable.
India Upfront with Pranesh Roy. Weeknights at 8 p.m. only on Times Now. No spin, no compromise, just the truth.
For over 30 years, my